Well, Ford shares kicking up about 2% into the green, into high gear. The automaker says it's investing $3.7 billion in plants in Michigan, Ohio, and Missouri in a bid to ramp up production of both gas-powered and electric vehicles, such as the F-150 Lightning. Here's the kicker. Demand is so strong, Ford says it's now in the position to add 6,200 new union jobs. So as Ford ramps up production, those vehicles and others likely will hit e-commerce site cars.com hopefully soon, right? The digital marketplace connects car buyers with sellers for a frictionless experience. Joining us now on a Fox Business exclusive is cars.com CEO Alex Vetter. You know, Alex, you guys have been grappling with low inventory all through the pandemic. How does a CEO like yourself take the Ford news?
Well, look, it's exciting to see automakers invest again for growth and bring new product to market. I know OEMs as a collective are announcing over 30 new models already this year, largely driven by the surge in EV interest. And we're excited to see that inventory come onto the market in the second half of this year.
Yeah, I mean, the car production issue has not just been hit by, I don't know, supply chain issues, et cetera, but specifically the chip shortage. And our viewers are so used to hearing about the chip shortage impacting cars. I know that some BMWs have hundreds of chips now in them. So is that fixed now?
No, not at all. But it's a feast and famine scenario. We're seeing some OEMs like Mercedes, Volkswagen, Audi come back with much stronger returns to inventory. But broadly, new car inventory is down almost 42% across the country, which is leading to a spike in pricing. New car prices are up almost 25%. And so not only is consumer demand strong, but you're dealing with limited supply, which is what's keeping this market moving.
And here's another, stumbling block, at least potentially, like you guys need yet another one. But the Federal Reserve, obviously, very seriously on track, at least to raise rates at the next two meetings, June, July, 50 basis points apiece, bringing, obviously, the short-term Fed funds futures or Fed funds rate above 1%. It's been a while, certainly since we've seen that. But that may make car loans pricier. And there's an Edmunds.com report. According to them, the average monthly payment for a new car is about $650, I believe, per month. And that's for 70 months. And for a used car, it's $544. Where do you see that pricing going in the macroeconomic environment?
Well, look, you've got two challenges: rising interest rates and soaring prices on actual cars. So new car prices up almost 25%, used car prices up nearly 20%, largely due to the lack of inventory. Now, on the interest rate side, as we all know, new car buyers tend to be more affluent, so we don't see that necessarily impacting the used car market, but it absolutely could present a little bit of a headwind to the used car sales if the Fed doesn't rein in interest rates in some way, shape, or form.
Yeah, and the headwind certainly doesn't help the picture for your investors because, I mean, at the moment, you have had a struggle year to date for the stock and year over year. When cars are so expensive, why isn't that translating to your numbers, your bottom line, or certainly your share price? Can you kind of give us a clarification?
I think we're in a situation where a lot of investors threw the baby out with the bathwater, not reacting to the more macro news. But if you look at our underlying fundamentals, they're strong. Our revenue grew in the first quarter. We've added close to 700 dealers to our platform. And dealers and OEMs are investing more in tech, not less. The whole industry is shifting towards digital sales, which is our bread and butter. I think when you look back to the 08-09 recession, I was proud to steer the company through that period as well, and we grew our revenues 4% at that time. And part of it's because cars have proven to be essential. During the last recession, consumers were more willing to pay off their car loan than they were their credit card debt. And I think COVID has helped remind people that, the car is an extension of our home. It's not going away. Right. We're seeing persistent, strong demand on new and used despite limited supply and increased prices.
And I do have to ask, because we just came out of Kelly's report about how high gasoline prices are. What kind of jump have you seen in interest for electric vehicles on your site?
Sure, a ton of interest, right? And we're leading the way there with EV product coverage and knowledge about what to buy and where to buy it. we saw a spike of over 200% on Cars.com in EV search share.
Wow.
Now, it's still relatively low. EV search and sales volumes remain around 3% nationally. You'll see it slightly higher in markets like Los Angeles that you just saw with record high gas prices. But again, OEMs are bringing, like Ford, bringing tons of new OEM product or EV product to the market in the second half of the year. And that's an exciting opportunity for us to capitalize on as well.
The race is on. Alex, thank you very much. Alex Vetter of Cars.com.
Thank you.